Good afternoon. Good morning, wherever you happen to be. Welcome to the tradingsyndicate.org. And I'm JJ, your cruise director. And for our entertainment show tonight, or this afternoon, we have the ES. Hey, Derek, how you doing? How's Massachusetts? I take it you're a Patriots fan. Redbeard, what's going on? Hey, Sadiq, the prodigal son has returned. Man, we thought the short sellers had you tied to a tree somewhere in the forest, up on the North Shore or something. Hey, Dave, Ronan, all right? What's going on? Oh man, Phil, what's up? Welcome to the folks joining us on YouTube as well. I'm JJ, and well, when you have people short in the market, you got to make the most of it, right? What are my thoughts on Jim Cramer? I don't know. I like him just because he's a character, and you know, I had a client that looked exactly like Kramer, but he was more hyper, if you can actually believe it. And the guy was he actually I only kept him as a client for a month because he was too volatile for me. And he was a master villain. He would think if he met you, he'd be like sizing you up to see how he could bankrupt you. He was just he could take down a bank like he was just a villain. Smart as hell. I learned a lot from him. Um, but he was just too. I passed him off to a buddy of mine who took all like I had a certain line with clients. If they were like too criminal, I just couldn't deal with them because I knew they would get me into trouble. So I had a buddy of mine that he would take anyone. Right? I'm like, this guy's really bad, man. He's got a history. He trades under 13 different names. Give him to me. Give him to me. Right? So yeah, and he looked just like Kramer, but skinnier and more hyper. So every time I see Kramer, I think of this guy. Hey, Hank, what's going on? Kramer's the only one who actually let it slip and told people what fund managers and what fund traders really do, how they goose stocks, and they show a lot of put buyers to make people think that you know a lot of puts are being bought and they short the stock so you can cover all that stuff. You know, he did that video, right? I don't watch him every day because you know, he's a little nuts. But we used to have characters like that when I was starting in the business. Everyone was a character. This business really didn't attract normal people, right? It did not attract normal people. Anyway, uh, I hate month end. I really, really hate month end. I will say that. It makes people do really stupid things, and it's hard to watch people do stupid things. Overnight inventory is long, okay? Overnight inventory is long. What does that mean? That means that if you look at the close, the majority of the trading is above. So we look for a correction down. Now, we've already had a correction, and now we have a seller here, and I'll go pull out that level in a second. But if we open above yesterday's high, we will open on another gap. I really hope we don't. Because we need another gap in this market like I need another hole in my head. Not really necessary. Right? This market's gotten way, way too short. Everybody and their dog, their cat, their alligator, whatever pet you have, your velociraptor if you have one, they've all gotten too short. And the market is using shorts like a rented mule. Right? Ever since the gap, we have higher lows. That means the bid is following the offer higher, which means buyers are following the sellers as they take price higher. The buying is forced buying. Very obvious because we're above yesterday's high and the cost basis has shifted upwards, which means there's a lot of short covering. What I'm hoping for, using the word hope in quotations, what I'm hoping for but not going to trade on unless I see evidence of it, and that's how it should be worded, is a move down to at least 61.51 to correct some of this inventory. Right? We're top heavy now above the previous day high, yesterday's high, because we've suckered in a whole bunch of people to go long, right? Not all of this is short covering. So a bunch of these people have been suckered to go long thinking that this is going to happen. If we get a break of yesterday's high, look for lower and we'll give you some targets in a second here. On the longer term of things, right? Longer term, 61.86 is my upper target. 51 is the first lower, and then 61.11. Yesterday's liquidation did not do much. It went right to the single prints of the previous day. So, I'm not going to tell you guys not to trade, and I'm not going to tell you guys to be careful, because you should know better by now. If you don't, well, you're going to learn. Month end is the worst for trading educators because you feel like somebody's mom running around going, don't touch the hot stove. You touch the hot stove. It's the same thing every month. Don't put your face that close to the dog. Don't put the dog's got your face now and he's not letting go. Okay. Right? So as they say in New York, go ahead. Trade your guts out. Just wish I owned a brokerage firm at month end. Anyway. That's what we're looking for, okay? Let's go take a deeper look. Overnight high, poor high. Overnight low, poor low. Once again, a boxed market. One time framing higher, inventory adjusts. One time frame higher, inventory adjusts. We just had a big inventory adjustment. So where we're going to see is, are we going to open above yesterday's high or below it? If we open below it, each one of these lower stops, which is just the low of the half-hour candle, right? And then there's the close of yesterday. So each one of these will be a target on the way down. Now, there's a couple of scenarios. The one scenario is that we do this right away and we don't fill the gap. Maybe save it till later. The second scenario is that we keep going sideways, which is like there's door number one, right? Don't fill the gap. Door number two, go sideways and drive everybody nuts, right? And door number three is actually liquidate down to the close. So those are your three scenarios. Now, because, and I kept saying this, that today was month end, and nobody corrected me until this morning and told me that Monday is the last day of the month. I thought tomorrow was. So tomorrow is month end. Monday is the last trading day of the month, but it still doesn't make trading any easier because everybody and his dog is short and they're trying to cover. So it's giving us some crappy price action. This was a nice little move down, right? But as you can see on the 1 minute chart, it didn't last very long. It lasted for a minute and then right back up to 68. Hey, Shark, what's going on? Hey, Josh. It does, Truth. It really does. Right? So, I would say if the market opens and can't take out 66, you could short it, look for bids at the previous day high. If it breaks 60, first target is 57.5. Okay? Now on the long side, say you bought it at 62, your first target is 66.25. And then of course the overnight high and these stops up here. So it's kind of mapped out. Let's see what the cat drags in for customers. Right? That's the big thing now. So I'm going to be watching 63. I want to see if they sell into those 63s. So we've got 16 minutes before the market opens. So I'll do some test trades and poke around and see what the flow is like. So if I go short 63, and I go and I put my stop here, maybe 60, 64, right? Because I see a seller here, right? See the seller right there, right? Printed 3 3/4, but the offer is back to where that seller is. Now, if the market gets over 64, 64/4, and starts offering higher, then I know I'm SOL, right? David, what happens in the market is the sellers, when they compete, they create the top of the candle. Doesn't matter what candle. The top of the candle is where the seller initiates. If there's competition, they'll push price lower than the top of the candle. It's real simple. It's not talked about in any trading book. How do I know this? Because I spent 25 years being the top of the candle. I was the seller. Takes one to know one. And if I'm a seller and you come along and lower price on the same thing, I am going to punch you in the throat and undercut your price. Right? I have to. Because you're trying to steal my customer. Get it? So only short. There's no battle. Yeah, it's a battle between sellers, but not between sellers and buyers. Sellers and buyers never fight each other. The sellers are always fighting each other. right? So if I'm short 60, where am I going to put a bid? I'll put a 60. Where is this level here? I'll go 61 and 3/4 bid and see if I get anything. Right? So I'm selling at 5. David comes and sells 4.99. Derek goes 4.98. Lear goes 4.95. And if I see some bids at 4.90, 4.89, I'll just hit them. Boom! That's how you get that big red candle. I'm not going to wait. Once I see sellers starting to compete, I will push you out of the way to get the client. I'm bid 61 and 3/4 and I'm not getting anything. I'm going to move my bid up to 62. Filled at 62, right? I'm going to put the other one at 61 and 3/4 and see if I get a fill. If I don't get a fill, I'll take the other one off at 62. Filled at 61 and 3/4, I'm flat. What did he do? How am I supposed to get my reps in and be disciplined with this market? You might want to try squats. Squat, bench press, deadlift. Those are the best reps you will get in the next 3 to 4 days. It's good. It's okay to watch, right? But it's brutal to trade, right? So we've got good distribution. Big green candle. They all came into cover at the same time. They saw what we saw. They saw a seller. So they came in to try and buy some size, and they drove the price up from 61 and a half to 67 and a quarter in 1 minute. That's why you don't fart around on the short side when there's no supply. I got 6,200 and something, almost 6,300 SPIL. Right now, it doesn't really matter. This thing's like a runaway train, right? Ah, what is the benefit at looking at market profile? There are 3 benefits. One is that you see single prints where shorts are trapped. Number 2 is you see the rotation of inventory lower and then upper very quickly. Like within 30 seconds, I can tell you where the inventory is and how it's priced. The other thing are poor highs and poor lows. So it tells you where shorts are trapped and where longs are competing. Those are really the only 3 benefits of market profile. Other than that, you really don't need it. It's kind of like it's not necessary to trade. You know, it's like having heated and cooled seats in a car, right? It's a bit of a luxury. I learned how to trade using market profile using for retail trading. That's why I still have it here, right? Because it tells me things quickly. But really, market profile and a 30-minute chart are the same thing. Market profile is just a fancy 30-minute chart. And I'm not taking anything away from the people who invented it. It's a beautiful thing. It gives us an insane amount of information. But the problem is in trading, how much information is there versus how much information do you really need and can you really act upon to actually make money in a practical way? Because there's a lot of information out there, but 99% of it is so impractical that there's no way you're going to be able to execute off of it. Howard. Once you have heated and cooled seats, you don't go back. Okay, I've never had cooled seats. I've had heated seats, and they are nice. The heated steering wheel. My 750 IL had a heated steering wheel. That was really nice. But yeah, you can kind of rig a 30-minute candle chart with pretty much the same way, right? And I don't use I use the candles to actually trade. I use the market profile is on the right. The 1-minute candle is on the left. The market profile is like a map of the city. The 1-minute candle is a map of the neighborhood I'm in. That's all it is. We call them mittens. That's about the most prairie thing you've said all morning, Josh. I have a heated steering wheel. They're called mittens. And that's the only place you really need stuff like that. You know, when it's minus 45, you'd appreciate heated seats, right? Yeah, there are people out in Florida with heated seats. What is the time frame of the market profile? It's just a half-hour bar. Shorts have been in trouble for a while, Doc. uh, because you were shorting. It's tempting. Yeah. I took a couple. I took 2 scalps today. No, 1 scalp. I took 1 scalp yesterday, 1 scalp the day before. But I think I did like 6 or 7 one-on-ones yesterday, so I really didn't have much trading time, which is okay. Which is okay. Yeah, 70 is a good target because it can get there, but you don't have to take that overnight high, so it's not a big deal if it doesn't. Any of you guys seen the movie Office Space? No? Yes, Timo? Month end is when our compliance officer would come around, and he was like the guy who would ask about the TPS reports. Yeah, so this account, you're 300 grand over. Lumberg, yeah. Um, the owners would like you to clear that up, and then you call your client because you got to move 300 grand worth of stock out of his account by tomorrow. And of course, he doesn't answer the phone because he knows why you're calling. A poor low and a poor high are definitely places to look for reversals. Oh my God, we would do everything to avoid the compliance officer, right? Do I ever play Forex markets? No, sir, I do not. I do levels up for people who want to trade them, but I don't touch it. It's a very popular thing. I think they get a lot of people in the UK and in Europe with Forex trading. But I've never actually seen or heard of anybody who's made any money doing it. Yeah, exactly. So here we have accumulation, distribution. You can see it on a small scale, right? And you'll see this, and this is why you can use candle charts just like a TPO. You can see the accumulation of product, a move up, distribution, and then when they put it on sale, they'll bring it right back to this area. So what we do at the trading syndicate is we try and give you practical information that you can use to trade with to make money. That's really what we want to do, right? It is a bell curve. It's just another way of displaying it, right? Exactly, Derek, right? Because a market profile chart is a bell curve that you flip over on its side, right? So a little plug for the room. Please drop by the room. You can get 25% off. It's less than 50 cents a day. And I promise I will teach you something that you can use to actually make money, right? And we'll explain to you the business reasons for why you take trades. You can pay month to month, right? Try it for a month and see if you like it. We do have a lifetime membership, but if you want to try it for a month before you commit, and then if you do join the room, message me in the room and we'll chat and, we'll find out how I can help you, right? But the thing is, everything we do is practical. Oh boy, look at that. Hey, Muhammad Ali. I think footprint charts are a great marketing tool. I think it's a wonderful marketing tool. And I use one footprint chart in an educational video just to show how a low is created, but you don't need them. Some people like looking at three or four things at the same time. But really, all you need to trade is a candle chart, a little bit of discipline, a little bit of common sense, you know, add a little dash of risk management, right? 99% of the stuff they give us, right? Everything's on that 1 minute chart. You'll be blown away about how much information that 1 minute chart will tell you. Now, I've got nothing against the nose print chart, right? But I have never met a footprint trader who makes money. Because they're looking at this, they're looking at that, and then they get into a microcosm, and they'll get short in the hole in a footprint thinking about, they use weird terms like unfinished business, which means like you've got to go to the bathroom, right? Just ridiculous stuff like that. Anything you use, be practical about it, okay? Just be practical. The more simple, the better. Looking for 68 and a half. No correction to overnight inventory yet. Does that make sense, Ali? I hope so. Distribution. See? There's the overnight point of control. Developing. Now, if we have to put it on sale, we'll come under 64 and a half. I don't know what a passive buyer is. I've been a seller all my life and there's nothing passive about it. I don't see how it helps. Cumulative delta is a waste of time. It's just another marketing tool. Look, if you know that there are sellers at 70 and a half and your log at 67, sell it to the strength. What do you need cumulative delta for? 90% of people who use delta don't even know what it means or how to interpret it. Right? Passive buyer, passive, like what is it? Passive aggressive? Like I've never heard of these terms. If you called me, David, and you told me, JJ, I want you to sell 200,000 shares of Microsoft. And if I told you, do you want me to sell that passively? That would be the last phone call I'd ever get from you. There's just some things that just don't make sense, right? Like, honestly, if the Penguin called me up and said, lose 200,000 shares of this, go. And I said, passive or aggressive, that would be the last trade I ever got from my client. He would move his accounts because he would think I was an idiot. So these words that sprout up on Twitter and on YouTube, they actually are not used in the business at all. Like unfinished business means you have to go to the bathroom. Right? All of these terms are just ridiculous. Where's the buyer? Where's the seller? How can I make some money? When when delta is going down and price is going up, Derek, it means that they're absorbing inventory on the bid because delta is uptick, downtick, right? So if the thing is down ticking and the price is moving up, it means somebody's bidding the market up. But why would you put your head through all that when you can just watch the offer? If the offer is going up, that means they've seen buyers and they're raising price. If the offer is going down, it means that they're running out of buyers and they're lowering price. Like, does it have to be any more complicated than that? People like complicated because it's a lot easier to steal someone's money than it is to help them not get ripped off. You've never heard that because none of the people who teach Delta have ever traded anything more than a 5,000 lot. Unfortunately. We got a seller at 69. Is he passive or aggressive? Or is the worst kind of a seller is passive aggressive? Just kidding, just kidding. All right, next seller is going to be at 70 and a quarter. Look, you can't laugh in this business. You can't take this thing too seriously. You start taking this too seriously, you get heart attacks. Your hair starts falling out. We had one broker at our firm. God bless him. You could every time you knew he was carrying over $1 million in debt for his clients, he would break out in hives. And you'd see him walking around the office just itching himself. We're in the elevator. Be like, rough month end? He'd be like, uh-huh. Okay, here we go. And that's a good thing because guess what? Markets change. All you have to do is survive the bad times. Be there for the turn. All you have to do is be alive and have capital for when it turns, right? Ride the thing until it turns, right? Be long-term greedy. That's another thing we trade you in the trading syndicate. This is what we teach you. You want to be long-term greedy. Think 5 years, 10 years down the road. Long-term greed. Long-term greed is good. Short-term greed gets you thrown in jail or blow up accounts. AZS, what's going on? Yeah, I swear to God, this dude would break out in hives anytime his sheet had too much debt on it. It's hilarious. I mean, he made 300 to 500 grand a month like clockwork, but his health sure paid the price for it. Just wait for a setup, right? Just wait for the fish to bite. Know if you're long at 64, 65, sell into the 68s. Yeah, my boss made 3 to 5 million a month. And we were the servants. The masters make 50, 100 million a week. When it's pumping, they make 2, 3, 4, 5, 800 million in a week. Best month I did when I was on the desk, I think, was 350. Yeah, remember we're just servants, right? As traders, traders are like traders are we're the truck drivers of the market, right? We drive the Kenworth and the and the Peterbilts and we're just all we do is just drive. Yeah, we're just transporting that stuff to you guys. Firm in Vancouver, BC. House Street. Long gone. And the brokerage firm I worked at, it was like the Oakland Raiders of brokerage firms, like the Raiders in the 70s. All the like deposed dictators, arms dealers, every criminal and despot traded through that firm. We didn't get paid bonuses. Our firm was like, yeah, our firm, we didn't pay. No, it wasn't like that. We were just pure commission guys. So we would charge 3.5 to 5% on each trade. So if you did a $100,000 trade, I would charge you $3,500. Oh yeah. You know the guys who robbed the Bank of Thailand, they traded through our firm. Right? It was just brutal. Right? No, I was on the trade desk. I wasn't a broker. I was a trader who had clients. because the big clients, they don't trade with a broker. They trade directly with a trader. So they call you, you call the market maker, the trade gets done in 30 seconds or less. Now with electronic trading, in the time it takes to do one trade a human being would do, this thing can wrap off 300 trades in the time that it took me one trade to do manually. Yeah, exactly. You know, our firm was so bad that when the old compliance officer retired, the new one was a young guy who used to party with us, and if you wanted to like break rules, you just flip stock in his sister's trading account, and he'd be like, "Look, you can't do that. Oh, your sister just made 5 grand. Okay, go ahead." So things were very different, right? Things were very different back in the day. Oh yeah, you okay? You worked in the city? Oh, that's cool. Like at a wirehouse? Oh man, the '90s were fun, and thank God they didn't have cell phone cameras. Okay, folks, what's going on right now is a rotation. You're from Long Island. Okay, you got to DM me what firm, because we know the same people. If you almost worked at Stratton, I had buddies. Well, I had a lot of clients who worked at Stratton, and I had a lot of buddies that worked at places like SG Martin. Um, where did Gunner own that firm? Sorry, I'm getting nostalgic now. Brockington, um, places like that. My best friend and partner was from Miller Place. Yeah, most of the guys went and started their own firms after Stratton got shut down. Exactly. And they sold all their offshore paper through me. It was a good time. It was a good time. We probably know some of the same people. I miss Long Island. Best times. Okay, can we break out of this little balance? I'm not seeing any selling under 64. Are you? Oh, okay. I remember you guys. 57th Street? Okay. All my buddies were from Miller Place, Port Jeff. Yeah, all paisans. Yeah, I miss them dearly. They went for sideways, Moran. Oh, a sell order. Oh, wake up. Wake up. A sell order. Right to. Ooh, we filled the gap. Just by a tick. If you blinked, you missed it. If you blinked, you missed it. Wow. I'm going to try something a little weird here. I'm going to take some at 14. I'm going to put my stop here under 12. Put some sell orders out at 65. 60. I mean, not 14, 64. I'm going to offer some out at 65. That's gone. 65 and 3/4. That's gone. And 66, that's gone. So I bought that at 64 after the flush. Hey, nice. That's a mercy fill, Truth. Nicely done. And once again, all that was the look below of 64 and fail. Right? And it wasn't really good for a huge trade, just like a little quick scalp. I will say this though. How people say, oh, all the guys that you traded for were like bad people and stuff. When I had my heart attack and my quintuple bypass, the only people who visited me in the hospital were like the worst of the worst. All my corporate clients, they didn't give a crap. But the guys who rode motorcycles, you know, the guys who drank a lot of vodka, they're the ones who came to see me in the hospital. Now let's see if we can tag out that 6160 on the downside. No. Okay, what are you going to do now? What are you going to do now? Show me what you got. Can we offer over 66? Aubrey, you sound like the guy in Entourage. Hey, suit. Gosh, it's like I I've got this short bias in my head now. So I'm saying it out loud. But it might take some time to play out. It's the only problem with it. I think if we can get under 6160, I think we'll piss off a lot of these people here and they'll start to puke it out. Let's see. Be good to have some good. There, come on, sell. Be normal. Come on. Come on. You know you want to. Can't leave that A low at the previous day high to the tick. That's just rude. Come on. At least go down to 68, 61.58. Come on. Come on. There we go. There we go. 2 ticks at a time. That's fine. Doesn't have to be pretty. Come on, sell off. So as soon as we get to that previous day high, the bids start coming in and you see that offer lift. Right? And then sell into it again. They're selling very delicately, right? Like a ballerina, not like a clog dancer. These algos are amazing, how efficient they are. There we go. Let's take out that low. Come on. There we go. Doesn't that feel good? Now down to 57 and a half. Come on. Ooh. Responsive buying because we opened the door. Dang it. Sell into it now. Sell into it. I have never seen markets that take so long to liquidate. You know, in the old days, you'd sell something and it would drop 5, 10 points. It was nice. You know, this, you got to wait. Like, you got to talk it down 2 ticks at a time. You know? It's like coaxing your dog to get into the car to go to the vet, trying to get this market lower. Let's see. Sellers at 64? Do the right thing. Sell some paper. Heartless bastards. Come on. A little lower. Oof. God, how many people shorted this thing last night? Again. That's the only reason why the bid would be so strong at 59 is because there's just too many people short underneath it. So we wait. Yeah, I don't really understand. Like, you know, options people, they talk, and they talk a lot. And I don't know what the hell they're saying half of the time. Now, I know that sounds like, I mean, it sounds bad, but I got to admit it, right? Like, they'll be talking about this and volatility crush and, you know, I'm thinking, what are you talking about? Orange crush? What the hell are you guys talking about? I have no idea what they're saying half of the time, right? You know, like I got one buddy of mine, he sends me these charts. I have no idea. The charts look like, you know, like a graphic artist dropped a bunch of acid, right? And he'll talk about all this stuff, and I'll be like, oh yeah, that's great. Cool, very good, very good, very good. Yes, wonderful, right? But I have no idea what the hell he's talking about, right? Because where I come from, you just find the bid and work off it. Now, we found the bid at 60, so you go long off the bid, right? So that's what we like to teach you in our room at the Trading Syndicate, that you don't have to have a PhD, you know, to trade. All you need to do is find where the buyers are and jump in front of them, right? And if you're short and you find the buyers, cover your short. Right now, it sounds a lot easier than it is in the actual practical execution of it takes time. Just like anything else, like learning how to skate or playing the violin. Both things I am completely bad at. Back to 64, huh? And then after a move, if the candles get small, if the range of the candle starts getting really small and tight, that means business is really slow, right? And you don't want to trade those small candles. It's what I call a pickpocket market. You go long, they take your money. You go short, they take your money, right? By the end of the day, they have all your money and most of your sanity. Thing about month ends are you really got to pick your spots. And don't worry if you miss a trade. There'll always be another one, right? There'll always be another trade. Gosh, that's some slow action. Let's see. Oh, circle caught a bid, right? So this is a look below and fail of 206, right? So it's cleaning up. That's a half-hour candle chart. How's leather jacket guy? 155. I got a 158.58 price target on NVIDIA. And check in with our an oldie but a goodie, old micro squish. I've got a 504.52 target on Microsoft. Corning, 52.26. 50. Where's our high? 52.32. So it likes the levels. That's a nice stock. Not a trader, more of a swing kind of deal. Palantir once again reaching for the stars. MSTR, if anyone's watching that, it's boxed right now. I don't know what that guy's doing, but he seems to have a good handle on things. Hopefully he holds it together, but 401 and then 419 of the upper. If MSTR breaks 358, be careful, because it's going to settle down in the 327s. So, I don't know. How's the coin of bitterness this morning? 106,900 on the old Bitcoin. Let's check on NQ 22,535. Gonna need some more levels for that thing. SPY 609. 6112 on SPY will be the next sort of level you're looking for. Last time we looked above and failed. IWM, not much to say. And then CL, after all the drama, back under 66. So, in the meantime, we cleaned out the 14s, 15s, and 16s. Not 16s, 66, 64, 65. We've cleaned those out. And there will be sellers somewhere here. Now, unless we've attracted enough buyers to warrant raising price over that line there. So next half hour bar is starting. Let's see if we can take out that high. Whoop, there we go. Stop run. See, that's the problem with this market and trying to short it. Right? You'll mess around, and then boom. Little stop run. They sold into it. If we get accepted above 71, be careful on the short side. Okay? Okay. All right. Being above 71, if you get that kind of action, Sierra chart, MP Singh. I use Sierra chart. There are not a lot of market profile platforms. Sierra is punishing to learn, but once you understand it and know how to use it, it's wonderful. There you go. Yeah, put your offers out. Way to go. Right? So on moves like this, if you're long, put your sell orders out there so the market can take you out on those jumps. Right? Because it's FIFO. First in, first out. Make sure you get paid, my friends. Right? This is a frustrating business. Right? It's vexing. It's frustrating. It drives people crazy. So when you have a win, get paid. I'm a big advocate of getting paid. And as you improve your skill, then you can hold trades longer. At first, take the money and run. Take the money and run. Yeah, it's very frustrating. It can be very lucrative, but you do have to put in the work. Right? That's what they don't tell you in the videos. End of the month profit marking up. If there was profit taking, it'd be selling and the market would be going down. I am listening. But end of the month looking good about your profits. Right? The large players don't go in and out so much. Right? They buy 5,000 contracts and then it just gets marked to market higher and higher. The higher it gets marked to market, smarter you look. Then you get invited to those really nice Hamptons parties that I never got invited to. Right? I was like, I'm a trader, so you only get invited to the office for the office party. You never get invited to the Hamptons. It's true. I've never been to the Hamptons. I feel like George Costanza. Yeah, the salesmen, they do all that. And the worst are the investment bankers. Oh, God. They're so snooty. Exactly. We get the pizza. No canapes for us. And now we're in distribution again, folks. Right? Exactly. Uh, See, this is, and just a little tip. These kind of candle formations, this stuff is really annoying to try and trade. So when you see that, just kind of relax and wait for your setup. Yeah, let's get into politics here, Al. Yeah. Ugh. I don't like politics at the best of times. Okay, little distribution here between 68 and 70. And let's see if we have to put it on sale back down to 67. Here we go, little sale. Does that bring in buyers? Hmm. I'm looking to see if we can get down past the open. Otherwise, it's going to rotate higher again in a very annoying fashion. Almost feels like Friday already, huh? No, there's not enough business. There's not enough customers in the store to have conviction. We got a bunch of tire kickers here. Nobody really wants to take anything down. They're just kicking the tires. Yeah, I'll buy a little bit. I'll sell a little bit. Yeah, I don't want to play anymore. All right, that's what's going on right now. Are you sure your data feed stopped, or is it really so slow that it looks like it stopped? Because that's what happened. You have to look at the chart. Is this thing moving? Oh yeah, okay. There's a print. Maybe your chart's trying to tell you to go to the beach, AZS. Oh, go visit the Porsche factory. Isn't that in Stuttgart? Yeah, nice. Go hang out in the garden. Would you close it out and not save it or something? All right. Accidentally shut it. Oh my goodness. Whew. Does anybody have any questions? It better not be this slow the rest of the summer. I'm going to give it until after the 4th. It gets to muck around for a bit. And then after that, the pace better pick up again. Hey, Cryptomania, what's going on? Otherwise, these YouTubes, I'm going to have to like learn some stand-up. Maybe do a cooking program. Yeah, we need some liquidation to the downside. Right? We need a liquidation break. Right? It's like farmers with a drought. Right? Well, there's no liquidation in a market. The price action just gets crappy. You're a Michelin chef? Get out of here. What the hell are you doing trying to trade? You're a freaking artist. Man, that is so cool. How can you learn not to freeze when you have a bad trade? Way to bring us back on point, Aaron. What you do is you get a trading process where you train yourself, so you have a set of procedures that you go through and you replicate on every single trade. And you practice it over and over and over again on the sim. So you put in your buy, you put in your stop, and then as soon as you get filled, put out your sell order, right? If your stop gets taken, that's it, right? You put in your series of executing orders, and you do it very, very sort of, in a very repeatable way, right? It's discipline. This is the worst business if you slough off, or you kind of dog it for just a little while. The market's like an alligator, just turns around and bites you, right? And that I had the hardest time with discipline when I first started trading. The stuff that I preach to you guys is nothing that I haven't gone through myself, right? I've gone through everything that you guys have gone through, other than blowing up accounts, because I am just too cheap to blow up an account, right? I can't do it, right? Even if it was somebody else's account, I couldn't do it, right? But every other mistake I've made, right? And I found that retail trading is like being like one of those competitive bodybuilders where you have to like watch your diet every day and only take in so many carbs and not drink this and not eat that, and like your discipline when trading. For me, I was never a disciplined person. And institutionally, when you got 20 million shares of stock, you set the price, create the chart. If they don't come, you lower the price, big deal, right? Here you have to have risk management, process, all of that. Why don't you give me a DM, Aaron, and I'll help you out. Just DM me on X, or if you're in a Discord, DM me. Right? All it is just training yourself. Just like a pilot, when they hit turbulence, they'll automatically go through a set of procedures. And what you want to do is you want to have that set of procedures so ingrained in your lizard brain that you just act. Wow, you're a chef. That's cool. It's funny. I always meet these people and they're chefs and doctors and, research scientists. And it just fascinates me that they want to be a trader. Because I always look at them in awe. Like retail trading is the toughest job I've ever had because you have to have discipline and you can't cheat, right? Everything else I've done, I found a way to weasel around the rules, right? I found a way to weasel around it, do favors for people, you know, if I wanted to find out what the SPRs on a company, there was a lady at DTC, I would send her flowers and she would give me information she was not supposed to give out. Like there's always a way around, right? You know? But in retail trading, there's no shortcuts, right? There's no cheating, right? It's brutal. That's why I came up with this, as soon as you put in your long, you put in your stop, and then you put your sell orders out, right? That way you're not caught, right? I am not seeing any sellers here, Derek. I am not seeing any sellers. I'm seeing some sellers, but they're not aggressive, and they're sure as heck not desperate, which is what we need for a short, right? The best kind of seller is to have an aggressive, desperate seller, right? And I am not seeing any of those right now. The sellers are all kind of like Rolex dealers, right? My buddy, I don't know why, he's like, I'm trying to buy this Rolex, and I've gone to 3 stores, and they say they don't have it, but I know they have it. I'm like, you're really going to beg someone to take 20 grand off you? Okay, well, why don't you just give it to me, right? So that's what the market is. Like, you want to buy it? Nah, we'll just move the price up just a little bit. See if you still want it, right? It's like those snooty stores you go into in New York and Hollywood. And they look at you like, what are you doing in here? Are you the courier? Come on, let this thing breathe or knock it down. Come on, we got paying customers. And I've got 11 minutes for you to do something, Mr. Market. Get to work. It's not summer holidays yet. Okay, we're back underneath the overnight high. So let me talk about, if you are in a trade. So say you are a short and you're short here. Don't spend any more than 73 on your stop. It's really not worth it. Right? And your warning level will be around 71.5. Right? So if you're short under 71 and it starts to go 71.5 offered, 72 offered, then you know you're in trouble. Right? Start getting ready to cover. Right? Now if you're long, that cluster of candles right there, I would use that as your stop. I'd use 61.67 as a stop, and 68.5 would be your warning. So if it takes out 68.5, then you know that you're most probably going to get stopped out. The books I would recommend are over 100 years old, but they're not going to help you make any money. They're going to teach you about the business and the really good financial history. But as Aaron says, putting that theory into practice is really, if you spend time, I guarantee you, if you spend at least an hour just watching, draw a couple of straight lines, watch the 1 minute candle go up and down around them, you'll start to notice things that you'd never noticed before. This is what I was talking about. So if you were short under 71, now you know you're in trouble. Right? And your last line of defense is 73.25. This is a very, very tough market to short at the end of the quarter. My favorite book is Inside Life on Wall Street by William Worthington Fowler. It was written in 1873, just when I was coming out of high school. My next favorite book is Once in Golconda. It's like 1921 or no, 1909, something like that. It's free because it's so old it's on Google Books. And then I have other books that I like. I mean, Liar's Poker is the reason I wanted to become a trader. That was by Michael Lewis. And my buddy Turney Duff's book, The Duff, The Buy Side. Yeah, and Reminiscence, of course, is the Bible. It's funny. I first got that book, Reminiscence of a Stock Operator. I got it in 1992, and I didn't understand a damn thing he was talking about. And then I'd reread it each year, and be like, "Oh, that's what he meant. Oh, that's what he meant." Just before that push up, I thought I found sellers at 61.71 and a quarter. I just forgot to move the stick, Patty. Sorry about that. That was lack of discipline. I think I was babbling a little too much. Next time, just get me back on track. Give me a poke with a stick. He got blown out, didn't it? Yeah. Um, I generally look at two candles. Generally, I look at two. Two candles with the same top, and then you can tell that they're selling in the same place. Like the first time, what I do, like say we had a candle here, right? And we got up there. I'd just draw a line anyway, just to see if it gets taken out or if that seller is going to come back in again. Oh, Bass Creole. There's a friend of ours, and she is a Sierra Chart authorized. Uh, I don't know what they call it. Help technician stuff type thing. And her name, she's on YouTube. She's got videos. Her name is Diana Penna. And she's got some good videos that are helpful on Sierra. She's actually authorized by Sierra Chart to help people. One of the few. Real smart. I don't think it lets me cut and paste a link. There. Let's see if that works. And we're creeping again. Looking for 78 now. As the shorts come marching in to try and buy. Yeah, if you're in our room at the Trading Syndicate, we have a whole Sierra section where there's information and there's people who are a lot smarter than me that'll be able to help you. Honestly, it's worth joining the room for that because Sierra sometimes is so hard to figure out. Oh man. Upper big target is 61.86. Oh yeah, I forgot about AI. Typical old guy. So did that help, Patty, that answer? So, for example, like that candle left a high, I would look to see if it slowed down there when we got back there. Yeah, it took me 3 days to learn Sierra. It was a Memorial Day weekend, like 2013. Cool, good. There's nothing to sell up here, right? So as long as the buyers keep coming, they'll keep raising price. See, and this is that price action that gets everybody short, because this looks weak, then you get a liquidation, then it looks weak here, then it looks weak here, just because the pace of trading is so slow, right? It's brutal, and then it just creeps, creep, 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 creep. Yeah, it's like you're in a trend day and you don't even know it until you get stopped out a bunch of times. You're like, what? Not much volume, 174,000 contracts. See, and that's a thing, right? One thing a lot of people don't realize is you don't need a lot of volume to move a market higher. All you need to do is not sell a lot. And now we have single prints. Again. At least we filled the gap, okay? At least we filled the gap. So that's our little short position there from 70 to 75. And they are going to there's 78. Let's see if that level works at all. And if you're wondering why the level works or doesn't work, it's just all based on inventory. So that's cost basis times 2 times 4, and then it would go times 8. So you have an idea of where your inventory is being priced, at a discount or at a really high markup. Jeez, okay, take it easy, yes. See, now the shorts are trapped. They're just finally realizing that they're trapped now. So 82 and 3/4, 86 is a big level for me. It's just right there before 87. And, oh, I kind of went over, didn't I? Oops. Next time somebody stop me, I just kept battling on. We're finished. Sorry. So, yeah, ladies and gentlemen, thank you very much. Have a wonderful morning. You guys got to stop me. Sometimes I just forget about time. I'll just keep rambling on. Have a good morning. Be safe out there, okay, folks? If you're in doubt, take a step back, right? Anytime you're in doubt, take a step back. Okay? Just relax. Rome was not built in a day. Autumn 9 Labs, thanks. Thanks for giving me those Long Island memories. I miss that place. Have a wonderful day, and we'll see you all tomorrow. And please visit us at the Trading Syndicate, and we can chop away at this crazy market together. Thanks, everyone. Bye for now.